News and events. Let's have a think about this sort of stuff, because for me, news and events are super important. Do you know which way the markets are going to move based on the news as it comes out? I heard this once and it kind of resonated with me, that the markets will carry on in the same way it was going until new information comes to light. Okay. So if the market's going up, it'll carry on going up until there's a reason for it to not do so, whatever that might happen to be. And one particularly big reason is for change in circumstances, a change in conditions. When you talk about trading currencies in particular, what you're talking about is sort of economic reasons. And there might be one reason to hold pounds, but there might be another reason that makes suddenly holding euros more attractive than pounds now, or less, or more attractive than it was previously. So what you end up with is money flooding from one currency to another, okay, in order to take advantage of a better rate of return. So this is where interest rates become extremely important. So really, when you look at economic data, it's not the economic data itself in a way that's really that important. It's its impact on interest rates. That is the thing that has the greatest impact. So what you're looking there is the data now likely to make it more or less likely to raise or cut rates. And that's what it really comes down to, because it's all down to that potential rate of return. So let's say inflation data is strong. That means the economy is overheating a little bit. That means demand's a little bit too high. We need to slow that down. How do we slow demand down? Then central banks, what they're more likely to do is raise interest rates. And why is that? It's to make saving more attractive, so people will hold more money in their savings accounts and spend less. It'll mean that you're going to be spending more money on your mortgage, and rather than spending it on other things. So it's going to, if think of it in those terms, that's going to slow that down. So if data basically means that growth, GDP, inflation data, retail sales, things like that is higher than expected, it generally means that we are now more likely to raise interest rates than we were before. Okay, it all comes back down to interest rates.
Click the link below to register for our free trading webinar and learn more about navigating news and events with Trend Signal.